and you do need to understand credit to make sure you are building your credit, because it's very easy to mess it up. Hi guys, welcome back to my channel. My name is Gabby. If you are new here, welcome. If you are not new here and you're a returning subscriber, welcome back. Today's video is very special to me because, first of all, this is the first time I'm filming with a camera. So normally I film with my phone. So if you notice the difference, please let me know in the comment section below. But another special thing about today's video is the fact it's about credit scores. I've been talking about the fact that I wanted to film this video for ages, and I'm finally getting to it. So we're going to be talking about a lot of fun stuff. Credit scores, credit cards, how to build your credit, why credit is important, how I built my credit from being really bad to very good. So we're gonna get straight into today's video. Before I go anywhere, say anything, disclaimer, I am not a financial advisor. I moved to this country a couple of years ago. I had a bad credit score because I essentially didn't have a credit score. And I've had to learn and really seek out resources and information to build my credit. That is how I have all the information I have on this video. It's all things I found in the course of me doing research. So obviously, as you watch this video, I will share a lot of information, but always please do your own research. So credit in general is a really large part of life in most Western countries, especially in the UK. So I moved from Nigeria, and coming from Nigeria, it's a society where the concept of having credit cards or credit scores or whatever is very foreign to us. It's not an integral part of day-to-day adulting, I would say. So a lot of people come here and have a lot of misconceptions about, like, oh, you don't need a credit cards are bad, or people just like to buy things on credit for no reason, all that kind of stuff. So I'm here today to try to clear a lot of that up and simplify why it's so important for you. So my first proper interaction with the idea of credit and like me having to take it serious was I walked into a Vodafone shop one day and tried to get a phone contract because my phone had fallen down and kind of been smashed. So I tried to get a new phone contract, which would involve the phone and like the internet services as well. And then they got all my information down and told me no, have been declined for the contract because you don't have any credit history, or basically having no credit history is very similar to having bad credit history. And I went away and I was just stunned. So I think for the majority of people, the importance of having a good credit score then comes up when you want to get a particular product or service and the company gives it to you up front, but you have to pay periodically, and they really kind of need to make sure you're not going to run away, or you're a reliable person, or you have a good relationship with money before giving you this. So situations like this include getting a phone contract, which is like such a simple thing, right? It could be getting a car on finance, something like a mortgage, which a lot of people aspire to buy a house, which for most people realistically you need a mortgage, except you have 400-500k to drop all at once. So yeah, that is kind of, I hope I've painted a picture of why this is so important. And the funny thing about having a good credit score is you cannot build a good credit score overnight. That's just not possible. Building a good credit score involves, one, time, and two, having a really good relationship with money. So I've said all this big English and you're probably wondering, what does it even mean? What your credit score essentially is a number that lenders use to look at two things. One, if they should lend you money or the service or approve you basically in the first place. And two, if any interest is involved in this, whether they should give you a high rate of interest or a lower rate of interest. And basically that is it. So I know I've obviously just simplified it for you guys, but it's not as black as white as it may seem. It is a bit of a complicated kind of situation, and you do need to understand credit to make sure you are building your credit, because it's very easy to mess it up. So now that you know what a credit score is, I would imagine that the next thing you're thinking is, how do you check your credit score? So there are a number of different websites that you can do this on, but I tend to use the 3 main free ones. Your number, your credit score may vary slightly on these, but I would say in general it's a best practice to make sure your credit score is good on all 3. First off, we have Experian. Second, we have ClearScore. And third, we have Totally Money. I'll link them all in the description box below, so you can just click on it to check it out. So once you open up an account with one of these 3, usually what you want to check is what your credit score is. You can also check if there's any incorrect information. That's a good place to check. You can check what your credit limit is. A lot of them tend to have suggestions on how to build your credit as well. I mean, these credit checking websites, and also a bunch of other stuff that is very important, but I will get back to that later. So if you are enjoying this video so far, remember to please hit the like button and subscribe to, of course, see more of my content, usually around London and life in London. So I'm going to go into the factors now that affect your credit score. I will say that understanding these factors is very important when you are trying to build your credit. So first off is the age of your credit accounts. Now, whenever you get a credit card, usually you have an assigned credit account. And the longer you've had that credit account, the better for you. Because 1, it shows your stability. It shows that you can have a credit account for a long period of time. And then 2, it also gives you the opportunity to show your good relationship with money. And the longer you have that good relationship with money, the better it is for you. I'll explain that whole relationship with money thing in the next point, but just another note on the whole age of account thing. Whenever you close a credit account, always make sure you do not close the longest credit account you've had, because that will definitely affect your credit score negatively. So when it comes to this relationship with money thing, one of the most important things is your credit utilization. Now, when you have a credit card, you might have, for example, a limit of £1,000. That's how much you can spend on that credit card. The very important thing that you want to do is make sure your credit utilization is at a very good level. This tends to be factored in terms of percentages. So what you want to do is, usually the sweet spot is spend only about 10 to 30% of your credit utilization. Because they've given you £1,000 to spend, doesn't mean you have to spend the whole £1,000. As much as I know it might seem silly, think about it like this. You've got a friend who comes to you to ask for some money, wants to borrow some money, and then you give them £1,000. Your friend then goes in the next month, and they said they don't have money. They've decided to spend all the money like someone that doesn't have common sense. Are you gonna want to give the person money again? Do you think that person has a good relationship with money? Basically, that is the idea, I believe, that the credit lenders use as well. So over 75% utilization is a no-go area. That is red. That will show up on your credit score negatively. That will affect it negatively. Between 50 and 75% is like amber, and it will probably show up as well on your credit report. So what you want to do usually is just stay in between that 10 and 30%. A bit of a weird note as well is 0% is actually bad. You don't want to not spend any of the money, because if you don't spend any of the money, they can't don't have the opportunity to see your relationship with spending, if that makes sense. So the next factor is your payment history. Now this has to do with maybe you take out a loan and your loan is due at a certain time and you don't pay that loan on time. Negative effect. You have a phone bill or water bill or whatever bill and you don't pay it on time. Negative effect. And on the flip side, if you do have these bills and you pay them on time, that will have a positive effect because you are showing again your good relationship with money. So the next factor is applying for credit. Now this is a bit of a weird one because usually when you want to build your credit, you need to apply for a credit card or you need to apply for whatever type of credit. Now the issue is, first of all, you have two types of credit searches. So when you apply for credit, usually whatever company it is will do a search to see whether you qualify. So usually they'll do either a hard search or a soft search. When you apply for credit too many times, and especially if it's a hard search, it has a bit of a negative effect on your credit score because I think basically you look desperate. So what you want to do is limit the amount of hard searches you have, and even if you do need to have these hard searches, make sure to space them out in terms of time as much as you can. And for every time you know you're going to apply for something that involves a hard search, make sure you check. You can do a soft search on your own, go online and check whether you think there's a possibility of you being approved for whatever you're applying for. Because if you are denied, that will stick on your credit score. So if you do a soft search, usually soft searches don't actually affect your credit at all, but a hard search will, and a lot of companies would use a hard search. I think in most situations they'll actually tell you they're going to do a hard search. So if you can, do a soft search before, check and make sure you will actually be approved. If you're not going to be approved, don't bother, to be honest. Just avoid it. So one factor that tends to be quite unexpected when it comes to building your credit is actually registering to vote. It's such an easy thing to do. It's completely free, and it basically helps the companies to verify your identity. It also helps to show just your stability as a member of society. Last stuff I'm going to talk about is mistakes on your report. Now, this is one I have personal experience with, quite painful. And I had a mistake with the address on my report. I had, I think, gotten a phone contract with an older address, and then I had my actual credit everything situation on another address. And I think that just looked dodgy. Yeah, so it could be anything from like your name being misspelled or your address number being wrong, anything like that. You can check on any of those three websites and then get it corrected. So I know I've spoken about all these factors that affect building your credit score. Now I'm going to talk about how to use a credit card to build your credit score. And from everything I've found, I feel like using a credit card to build your credit score is the easiest and I think most reliable way in order to really make a big difference in building your credit score. Yeah, so I will say, if you know, to be honest, you have a bad relationship with money, if you have money with you, you're going to spend everything that you have, and that will happen with a credit card. Maybe getting a credit card is not for you. So first off, what you want to do is obviously check what your current credit score is. You want to see where you're starting from, what you're working with, right? And usually with any of these websites, especially just using the example of ClearScore, ClearScore has a kind of section where they will show you a lot of credit cards, and you will see the probability of being approved for each different type of credit card. So yeah, so usually what you want to do is apply for one of the ones on there where you have a high probability of being approved, and apply for that. Usually they have really high, maybe a really high interest rates, and then two, you're not going to have a huge credit limit. It could be like just £200 or £250 to start off, but that's just starting off, and don't worry about the interest, we're gonna get there soon. Yeah, so once you have your credit card, what you want to do is always remember the principle of credit utilization that I explained earlier. Make sure you are staying between the 10 and 30% range. 1. 2. Also, always pay back in full. A lot of these credit card companies will tell you have a minimum payment of £50 or £100 or whatever. That's not your business. Just completely ignore that. Make sure you pay back in full and also pay back on time. Usually the biggest problem with credit cards is when you do not pay back on time, or when you do not pay back in full, especially when you don't pay back on time, because that's when you start to have to pay interest on it, and you don't want to go there. So with time, as you start to do the right things, you will see your credit score start to go up monthly, bit by bit. It might not be huge all at once, but it will start to go up bit by bit. And what you then want to do usually is then increase your credit limit. So you can either usually then move to your regular bank that you use and get a credit card from them, or you can, with the existing credit card company you're with, increase your credit limit. Increase your credit limit. Just give them a call usually and they'll approve that. And yeah, it's really all that simple. So today's video, I know, included a lot of information, but I hope it's all been helpful to you, and I will see you in the next video. Bye.